Hey, what's up you guys? It's Michael here. So as I'm sure many of you are aware, the one thing I like more than anything, even more than finding creative ways to ask you guys to smash the like button for the YouTube algorithm, is passive ETFs. And I'm definitely not alone here. Vanguard is the most popular ETF fund manager in Australia and has been for quite a while. Last year, 2019, was a record year for Vanguard ETFs, with their assets under management hitting over $19.5 billion in 2019. Making 2019 the strongest year for Vanguard ETFs ever since they started launching ETFs on the ASX 10 years ago. So I guess that means they're doing something right. But for me personally, these exchange-traded funds hold a special place in my heart. I spend way too much time researching ETF options, looking at all the different options available on the ASX and looking at their historical returns, their dividend yields, their capital growth over time, what sectors they're investing in, their management fees. Today, all that research and time spent analysing Vanguard ETFs really late at night is finally going to pay off. Because in this video, we're going to be covering what I consider to be the top 7 Vanguard ETFs in their respective categories. We'll be going over the best Vanguard ETFs for fixed interest, for high growth, property exposure, the best ETF for Aussie shares, the best ETF for international shares, the best ETF for emerging markets, and to top it all off, the best ETF overall that Vanguard has to suit most types of investors. This isn't a video that's going to teach you how to get rich quick because that really isn't the style of Vanguard ETFs or passive investing in general. But what it will do is provide you with some options to grow your wealth consistently over time through these passive ETFs, and depending on your preferences to where you want to invest, give you a few different options to think about. So sit back and relax. I've compiled all the research, so you don't have to do a single thing besides watch the video and smash that like button for the YouTube algorithm. Of course I had to say it because that little blue like button holds a special place in my heart, almost as special as Vanguard ETFs. So with that said, thank you so much and let's start the video. First off, we're starting with an easy one, and that's the best Vanguard ETF for fixed interest growth, also known as using bonds or other conservative instruments. This ETF option is a great one for people who are probably a little bit further down in their investing journey and really want to look for some more conservative options to protect their wealth and protect their investments. But it's also good for people that are a bit younger as well, that just want to allocate a portion of their portfolio to these more safe, more conservative investments that will just return fixed income over time. The benefit of a fixed interest ETF is that you can really just park your money there and you can get reliable income, and you don't have to be too worried about like market fluctuations with the market going up and down. You won't necessarily lose money, but you just might not gain as much money. The way this ETF is able to do that is because this ETF actually invests in government treasuries. It uses treasury bills, notes, and these treasury bills, notes, and bonds are effectively debt that the government owes that you can buy a piece of, and then the government will effectively pay you back a premium for holding on to that bit of interest. So in a lot of ways, it is one of the most safest form of investments because it's very unlikely that a reliable developed government is going to go broke and not pay their debts. And if they do, we've probably got a lot more to worry about than just our investment portfolios. So the best Vanguard ETF for fixed interest is the Vanguard International Fixed Interest Indexed Hedged ETF, also known on the ASX as VIF or VIF. This ETF seeks to track the return of the Bloomberg Barclays Global Treasury Scaled Index hedged into Australian dollars before taking into account fees, expenses and tax. As an overview, VIF provides low-cost exposure to these high-quality income-generating assets issued by governments around the world. The ETF actually only invests in government bonds and securities that are either BBB to AAA rated, so these are the highest quality bonds, so none of that subprime mortgages that you've heard of before. And the ETF is actually hedged back to Australian dollars, so you don't need to worry about currency fluctuations as well affecting your investment. So why I think VIF is the best fixed interest option out of all the ones that Vanguard has is firstly because it has the lowest management fee of all the other ones at 0.2%. And secondly, unlike some of the other options, it provides exposure to bonds and securities held by governments globally, hence why it's called the international version. Some of the others are only, for example, Australian exposure. That's a little bit risky because you're purely exposed to a singular government rather than spreading that risk across multiple governments across the world. And given that it's only investing in high quality BBB and above bonds and securities, it's really unlikely that these governments will be unable to pay these debts back, because these are the first debts that do get paid back above all of the other ones. Since inception, VIF has returned around 4.5% per annum, And this is primarily through distributions, which are paid quarterly. And given that most savings accounts in Australia at the moment aren't even returning over 2%, being able to get 4.5% fairly consistently over the long run is pretty good. Now we're going to be moving on to the next category on this list, which is the best Vanguard ETF for high growth. One thing to keep in mind for high growth is that it really should be called highest expected growth over the long term. And with that expected high growth, you are taking on the highest risk, which basically means, unlike the fixed interest option VIF that I just showed you, which has extremely stable returns over the long term, a high growth option is going to be really volatile. It might return 20% in a year, but then it also might just be going down 10% the next year. High growth ETFs really aren't for the faint-hearted, and they're for people with really long investment periods. I'd say at least 15 to 20 years to be able to ride out any sort of market volatility or crashes during that time. Vanguard ETF I chose to recommend today has extremely low management fees, in fact the lowest of any Vanguard ETF, and it's 100% equities with no bonds or conservative or defensive options at all. So I'm sure you can guess at this point, what I consider to be the best Vanguard ETF for high growth is VTS, or the Vanguard US Total Market Share Index Fund. And at a really high level, it basically just aims to provide investors with the returns of the whole US market. Start with, like I said, it has really low management fees of only 0.03% per annum, which given the fact that it has over 3,000 holdings actually means it's giving pretty good value. And the return has been fantastic. Since inception, the ETF has returned over 15% per annum, with a small portion of that coming through dividend growth of around 2% per annum, which definitely fits the bill of high growth. So one thing to keep in mind with VTS is that it is US domiciled, which is really different to a lot of the other Vanguard ETFs, which are all Australian domiciled. Quite simply, it basically just means that you'll need to fill out another tax form during tax time, and it makes that a little bit more complicated, but it's really not too bad, and given the returns and the low management fees, it's probably worth it. And secondly, the ETF is not currency hedged, so you're obviously exposed to any fluctuations between the US dollar and the Australian dollar, and it definitely means you are a bit overexposed to the US market. This could be a good thing or a bad thing. Historically, it's been a really good thing, hence those high returns. But there's no way of us to know if that's going to continue in the future, but that's the risk you've got to take with an option like VTS. A big part of why the US has dominated in the last few years is because of all this technological innovation that's been coming out of the country. If you are looking for some other high growth ETF options, check out my video on technology ETFs on the ASX. Now, with all that high growth talk out of the way, the next category that we're going to cover is the best Vanguard ETF for property exposure. I'll let you guys in on a little secret here. Vanguard actually only has a single ETF for property. So this one is easy. It's the Vanguard Australian Property Securities Index ETF, otherwise known as VAP. This ETF, like most of the other Vanguard ETFs, has a low management fee of only 0.23% and has actually returned 9.26% per annum since inception. And what's particularly nice about this ETF is that a decent chunk of that return has actually been returned as distributions of around 5% per annum. And there's usually a portion of that which is franked, so you'll be able to claim a portion of that back at tax time as well. So it's a really cool option for people who do want a bit of exposure to that property market, but don't necessarily have the money right now to fork out for a big deposit on a mortgage, or don't even want to get a big $1 million mortgage in the first place. So the way this ETF does this is by actually investing in other REITs available on the ASX, REITs being real estate and investment trusts, across various sectors in Australia from retail, office, industrial, commercial. So you're getting good exposure across multiple different areas of real estate. And for a lot of investors, this is a really great way to get your toes wet in the property market without necessarily having to go out and get a deposit and getting $1 million mortgage and with everything that goes on with that as well. But if all you're looking for is that local Australian market exposure and those sweet, sweet franking credits, then Vanguard's got the ETF for you, with what's actually the most popular ETF in Australia. And that's the Vanguard Australian Shares Index Fund, also known as VAS. So what can I tell you about the most popular ETF in Australia? Well, it's got a really low management fee of only 0.1%, and since inception has returned over 8% per annum. And as part of that 8%, about half of it, around 4% per annum, is usually in a dividend that's usually around sort of 60 to 70% franked. Which actually means that since a sizable portion is this dividend and a sizable portion is franked, it actually means that the true return is a little bit higher than that 8% per annum because you're obviously getting some tax rebates every year as well. The VAS actually tracks the top 300 companies on the ASX and is suitable for people who want long-term capital growth but also have an insatiable need for dividends and those sweet franking credits, like so many Australians. It's a bit of everything and is probably why the ETF is so popular. The only real downside is that obviously it is very exposed to equities, 100%, and that you're only getting exposure to the Australian market. As an Aussie, if you want to get those franking credits, you really do have to invest in the Australian market, and VAS is a good option for that. Now I'm going to move on to a slightly different topic, which is best Vanguard ETF for international shares, which at a time like this can actually be pretty useful to get that global diversification. Given that there is so much market volatility going around in the world at the moment, it can really be quite difficult to understand or comprehend which countries or which economies are going to do well and get out of this pandemic, and which ones won't do so well. That's why having global exposure is such an important thing to have at a time like this. And what I would consider the best Vanguard ETF for this global, for this international exposure is VGS, or Vanguard International Shares Index Fund. To start with, VGS has a really low management fee of only 0.18%, which given the fact it has over 1,500 holdings is really pretty cheap given how much it would cost to actually buy all these stocks individually, and also given the fact that they're all around the world, not just in Australia. One thing you don't get for this small fee is currency hedging, which does mean you'll be exposed to any currency fluctuations between the Aussie dollar and any of the economy currencies that VGS is invested in as well. There is actually a version of VGS that does include currency hedging if you do want a little bit less risk and you are willing to pay a slight premium of 0.03% on top of that 0.18%. So at 0.21%, you literally get a version of VGS that has currency hedging pegged to the Australian dollar, and the ticker is called VGAD, VGAD. The reason why I think VGS is a little bit better and edges out among all the other competitors that Vanguard has to offer in this space is the fact that it is so global, and that it actually doesn't include any Australian holdings. So I know what you're thinking, is that actually a good thing? But for someone who works in Australia and earns their income in Australia, personally I wouldn't want to also have many investments in the Australian market as well. Purely because, for example, if the market economy purely in Australia was to crash, it means both your investments and your job might be at risk. Whereas if you have a lot of your investments globally, outside of Australia, even if there's a market downturn locally in Australia, your investments will still be doing okay. And then vice versa, if the market globally is not doing too well, at least in Australia, hopefully your job will be safe and you're not exposed to that global downturn. I also really like VGS because it only has holdings in established companies that have a track record in developed economies, so it doesn't have any emerging market holdings. This is good because it's quite stable and won't be as volatile as any holdings in those emerging markets. Finally, it has a good track record of providing good returns historically, of over 11% per annum since inception, and a good chunk of this is in a distribution or dividend as well, at around 2.5%. Which I would consider a very satisfactory return for any ETF. However, if you're not interested in that global exposure, and you do just want exposure to emerging markets and more speculative economies, and you just want some of that sweet potential growth from these emerging markets, then I got you covered with the best Vanguard ETF for emerging markets. And that's the aptly named Vanguard FTSE Emerging Markets Share Index Fund, or VGE. VGE simply seeks to track the return of listed companies in those emerging markets. One downside with emerging markets though is that typically any ETFs investing in these economies will have higher management fees because they're more volatile, require a bit more management in terms of trading shares in and out, and they're also just a bit more difficult and more expensive to access. So there's a management fee of 0.48%. And the return since inception hasn't been the highest either. It's been 5.97% per annum. However, that is probably to be expected if you think about it, since these are emerging markets, and by the very definition of the name, they are emerging, so they haven't actually established themselves yet. So by the time they have achieved high growth and great returns, they probably wouldn't really be considered emerging markets anymore. One thing to note though about VGE is that it is heavily weighted towards China, with around 40% of its portfolio allocated towards Chinese investments, with 15% even in Taiwan as well, and then 10% to India, and then the rest scattered among other emerging countries. So again, this really is suitable for someone who does have a little bit of an inkling and a little bit of a bet on emerging markets, or even just wants to allocate maybe a smaller portion of their portfolio so they don't miss that growth that will happen at some point in those emerging markets as well. and it acts as like a bit of a hedge against sort of developed Western economies, and is nice to sort of include in your portfolio for that reason. And lastly, now we're finally here at the best overall Vanguard ETF that I haven't mentioned in any of the other categories that I've spoken about in this video. Now, when you have to find and think about a best overall ETF, it basically means that this ETF will not be the best in any one regard. So it won't be the best for highest growth, it won't be the most conservative, it won't be super speculative, it'll be just down the road, it's a bit of a jack of all trades. And it's got to come as no surprise given the list that I've gone through and just how popular this ETF and how often recommended it is, that the best overall Vanguard ETF award goes to VDHG, the Vanguard Diversified High Growth ETF. Also known as the holy grail of passive investing and the ETF that everyone recommends to anybody who's either just getting started with investing or even if they're an experienced investor as well. It's basically never a bad option, which is why it's best overall. Has a management fee of 0.27%, and since inception it's actually only returned 5.32%, but that is a little misleading because the actual ETF version of this Vanguard fund is quite new, with only being really a couple of years old. But the actual managed fund version, which is available separately to the ETF, has been around for decades, and over the long run has returned over 8% per annum. And that really is more of a true reflection of the historical returns. A little bit more about VDHG for others that don't know. It's nice because it's got mostly growth stocks, so 90% allocation towards shares, with 10% allocated towards more conservative investments like bonds. And what's actually super interesting about VDHG is that it's actually a collection of multiple other Vanguard ETFs, which is what makes it that one-stop shop for getting diversified exposure across multiple sectors, multiple countries, and multiple industries. I'll put the weighting of VDHG up on your screen just so you can get an idea of what other funds it's including and the weightings involved. But really, why is VDHG so loved and so recommended? Well, the reason is that it's basically just never a bad option, like I previously mentioned. No matter what type of investor you are, no matter what period of investing you're in, unless you're maybe just about to retire, then you probably want to just go a bit more conservative. But for the vast majority of people, it's going to be a good option and you can't really go wrong with recommending it. However, if you do want some alternatives to VDHG, perhaps you want something a bit more growth focused or maybe something specifically focused in a specific sector, check out my video on 8 alternatives to VDHG, where I go through a bunch of alternatives at different sort of varying levels of risk tolerance. So there you go, that's my top 7 Vanguard ETFs available currently for their given categories. I'm sure these will be eventually changing over time, but as of right now, these are what my thoughts are and what I sort of, in my opinion, think are probably the best ETFs in their given categories. Which begs the question, what will the next ETF be that Vanguard releases? Let me know in the comments what type of ETF you want Vanguard to release. Personally, I would love for them to release a more technology-focused ETF because I think that's one gap in the market that they're not fulfilling currently. And really, a lot of their competitors are fulfilling quite well. With that said, guys, thank you so much for watching the video. I really appreciate it. Make sure to hit subscribe and hit that notification bell. I'm posting multiple videos per week on investing and personal finance. And just as a reminder, I'm not a financial advisor. These are just my thoughts on the Vanguard ETFs today. You always have to do your own research and find out if it's suitable for yourself. Otherwise, please destroy that like button and I'll see you guys in the next one.